Hello, I'm Isabel Hessel-Tiltman. I'm joined today by Simon Tinkler, who's head of our London corporate practice, to discuss how the UK market is doing currently. Simon, what are we seeing at the moment in the UK M&A market?
It's an interesting time. M&A, I think, in the UK and also in Europe generally has been quite flat for a period of time. We're starting to see some signs of uptick in general M&A, but I think we're seeing a lot bigger signs of uptick, for example, at the moment in the private equity area. But overall, M&A is still relatively flat, but hopefully we've seen the bottom and it's starting to turn up.
Okay, and what you mentioned private equity, but what are the trends that we're really seeing then when we look at how private equity is doing?
Well, it's been quite quiet for a while. Probably the last 6 to 9 months have been some of the historically quietest levels we've seen for a number of years. A couple of things have changed. I think there's a number of assets coming to market that are high quality, that are attractive to the houses that want to invest and are now stable and ready to invest. But there's also a lot of availability of financing, particularly from the US. And I think even for European assets, houses are able to access the US debt markets and the sort of the liquidity that's there because of the strength of the US economy and those markets.
And what opportunities are the US private equity houses looking at when they're trying to sort of access Europe?
I think for a period of time, people were sort of slightly sitting on the sidelines and were worried in particular, for example, around Southern Europe, around the stability of the Eurozone. And we also weren't sure whether the businesses themselves had stabilised. I think over the last few months, we've seen a significant upturn in investors from outside of Europe, includes the US, but also some of the Canadian funds, looking at assets because they can see attractive transactions, they're comfortable with the valuations, and they can see real opportunities for restructuring. And we're even seeing an uptick in interest in sort of what people would regard as the Eurozone periphery.
And are we seeing the sort of private equity players adapting to the current environment in any way? Is the private equity market sort of changing?
I think to an extent there are some players that are changing. We've seen a number of direct investors coming in, such as some of the Canadian funds, some of the Asian entities, who traditionally would have invested into a fund, and then the fund manager would have made investments within the European context. But a number of those are sort of investing directly now. And I think it's for two reasons. One is it's a sort of disintermediation where they've got the expertise to invest directly and take a majority stake, but also they're investing into a number of assets that are match their liability, so the longer term infrastructure type assets. And you saw it, for example, there was a bid recently for Severn Trent, which ultimately wasn't successful, but included a number of Canadians and other overseas entities that were looking at matching those long-term infrastructure assets with the liabilities that they have in their original pension schemes.
Okay. And how about sort of traditional public to privates? Is that an area which is moving at the moment in Europe? Or
well, you've seen a couple of really big ones in the States. So we were acting, for example, on the acquisition or the bid for Dell. You haven't really seen that takeover so much in Europe, and that's relatively driven by individual markets. But if you look, for example, at London, it's actually got harder for private equity to invest into public to privates because of the changes to the takeover code 18 months ago. So go back to Severn Trent. Maybe 18 months, 2 years ago, that's a deal that would have progressed through because the bidder could have put more pressure on the board. But with the changes to the rules that give a very short period of time for the bidding vehicle to either make a bid or walk away, the board were able to resist the offers from the consortium. So that made a specific difference to that transaction, made it much harder. And I think people are looking much harder at those deals.
Thank you very much.
Okay, thank you.